Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined by the Chief Strategy Officer of Bitdeer Technologies Group. This is the first time we've had Bitdeer on the channel for an interview. We're both super excited. A lot to go through in today's presentation, but before we get into it, please take a second, hit the like button, you guys. It's a huge help to myself and the channel. Anthony loves it. It helps push this content to other people like you who may find value. If you're not already subscribed, McNallie Money, feel free to join. We're just about at 43,000 subscribers. We'd love to have you as part of the community. And finally, leave a comment in the section below. Let us know if you're holding shares of Bitdeer, what you think about this business, and your outlook for 2024. Now, with that being said, let's get into today's interview. Okay guys, so that's right. We've got the dream team here from Bitdeer Technologies Group. This is the first time having this team on the channel for an interview. Bitdeer is really firing on all cylinders right now. We've got a lot to go through in today's interview. First and foremost though, Harris, thanks so much for being with us here today. Chief Strategy Officer. We've also got Jeff LaBerge, who's the head of capital markets with us. And then of course, our good friend Anthony Power. So guys, thanks so much for being here today.
Hey, thank you. We really appreciate the opportunity.
Yeah, great to be on. Thank you, guys.
Great. So to kick things off, because this is your inaugural visit, can we just get a high-level summary of what Bitdeer is all about? We'll get into the various different business units in a second here, and just a quick background on yourself, Harris.
Sure. So Bitdeer is a mining company, a Bitcoin mining company, and we are global. We have operations on 3 different continents. We're one of the largest Bitcoin miners in the world. And we're also the only Bitcoin miner that's vertically integrated in that we also make, or have just started to make our own mining machines. And that's probably the biggest input into Bitcoin mining. So we feel like that's the most important step a miner can take in terms of vertical integration. And so that's sort of our company. We are headquartered in Singapore. Most of our operations are in the US, Norway, Bhutan. We have a little bit of AI data centers in Singapore right now. And my background is really mostly in semiconductors. I've worked with several semiconductor companies, started semiconductor companies, developed new technologies for ultra low noise, high precision, timing circuits for high-speed communication, for LEDs and lasers, and also for Bitcoin. And so one of my jobs here is to do advanced development for IC design for Bitcoin. And then I also cover investor relations, capital markets, things like that.
Jeff, just before we talk about the vertical integration, can you just give us sort of like a couple of minutes on some of the highlights of 2023? I know you've recently released an update, and your earnings go out officially today. But just give us a couple of minutes on what some of the highlights of those earnings were, please.
Yeah, sure. So for fiscal 23, we had about just under 370 million of revenue, and I think that would be just short of Marathon from all the other public Bitcoin miners. 100 million, just over 100 million dollars of adjusted EBITDA. And I would point out that our adjusted EBITDA is 100% from operations, because we don't hold Bitcoin on our balance sheet, so we have no mark-to-market or gain on sale of Bitcoin. So that all came from operations. So again, we've got a very diversified portfolio of business lines, especially within the Bitcoin mining sector. A lot of that came from hosting in 2023. Our self-mining was about we had just around 7 exahash of total self-mining hash rate, 8.4 of total proprietary hash rate. So the rest was really from hosting. But yeah, we're happy with the results, and that EBITDA, including that, includes in there our R&D expense, which was just over $16 million for the year. So we're very happy with the results.
Excellent. I mean, I covered some of those numbers in a recent article I had published by Compass Mining. But for sort of like retail investors looking at sort of like in the Bitcoin mining space at the moment, you've already articulated, both of you, about some of the vertical integration. How should viewers think about and value your company compared to a peer company?
Different than how they're valuing it now, but no, I think it's you really have to look at it as more of a sum of the parts. We're not just a traditional pure play Bitcoin mining company, which we think is a good thing. We think that we offer something different, a different look for investors. We're really covering the entire spectrum of Bitcoin mining, from hosting, self mining, and now ASIC manufacturing, which we think has a lot of upside for us. Not only just upside in the business line, we think it really helps smooth out some of the cyclicality in Bitcoin mining industry, because obviously we move in this bull bear cycle from 4-year bull bear cycle, and that diversification really allows us to smooth some of that out, because we can have a lot of flexibility in how we move in between our different verticals, between our hosting and our self-mining business. If you were to look at our company back in 2021 during the bull market, we were primarily a self-mining company back then. About over 90% of our revenue came from our proprietary hash rate. And then as you saw the market sort of soften in 2022, you saw us pivot more toward hosting, which I would argue served us very well during that time, because it smoothed out a lot of the volatility that some other miners might have had during the downturn, and just gave us a nice yield-based cash flow stream during that time. And now what you're seeing is some of those contracts that we intentionally structured as short and medium term are going to start rolling off now, and you're going to see us be able to start flipping back to self-mining going into this next bull market. So we're very excited about that. We just had an announcement that we're going to be growing our proprietary hash rate by the 3 or 4 exahash this year. Very measured approach. We're hoping to do more, but so I think I think institutional investors are starting to look at us like that. The analysts, I think, we're starting to get to look at us like that, looking at the parts of our business and really valuing that flexibility and that optionality. And I think if investors take a look at that way, I think they'll be happy with it.
Great.
Also, just to point out, the mining rigs, we will be making them for ourselves and also to sell on the merchant market, and that also helps us smooth out the cycle for Bitcoin, because we also don't have to inventory all these machines during the down cycle of Bitcoin. We can use them in our own data centers, and when there's a bull run for Bitcoin, we can sell them because the margins are better at that point. But that's actually quite a good way of smoothing out our business cycle as well.
Really exciting stuff. We're going to get into the Sealminer A1, all the production. We've got a bunch of questions for you guys. But Jeff, I'm glad to hear that you were strategic in setting up those hosting contracts, timing that obviously with the halving and the bull cycle expectations there. Now, the next question I have for you, you mentioned flexibility. You've talked about looking at each part of this business as the parts combined to the whole type of thing, 5 or 6 different parts. How agile is your company as we start to go through these different parts of the market cycle, being able to flip on and off these various different business units? Is there added complexity that there's all these pieces, or does it actually help your agility and flexibility?
No, I think it helps, because again, they may seem like different business lines, but they're all part of one cohesive business model, and that is just working around capacity and hash rate, right? So like I said before, we had quite a bit of our capacity allocated to hosting contracts previously, and essentially flipping that to self-mining just means terminating the contract or letting that contract roll off, moving our host miners out and moving our own miners in. So it's really just plug and play expansion for us. So
we also, I'm sorry, go ahead. We also have this cloud hash rate, which is an intermediate form of hosting in a sense, in that we can just through software switch mining rigs from self-mining to cloud hash rate and back and forth, and we can do that on the fly. Even do it with hundreds of or thousands of mining rigs at a time, or with even fractions of a mining rig. So there's a lot of agility there, both in time and in the resolution of how much you allocate for cloud hash rate versus pure self-mining.
I mean, you've talked about some of these great business models now, but the one that impressed me this year was the actual announcement of the Sealminer A1 and the production in-house. I mean, you probably should get an award for creating the name Sealminer A1 because it stands out as probably the best name for a miner in the industry at the moment. But can you tell us about the expansion possibilities with this new mining rig and where it can go from here?
So let me just put this in context. The Sealminer A1 is a great product, and we will be, selling it, releasing it in the second half of this year. We've taken a lot of orders on our website already. I think that's well over 1 million there. But that's the first in a series of seal miners that we're going to have, hence the O1. And we have multiple teams working on continually improving and upgrading our capabilities. So we are taping out, multiple times a year. You will see a constant stream of improvements in efficiency and other, features from us as time progresses. And so our goal here is to be the dominant player in mining rigs and to have absolutely the best, highest efficiency, lowest joules per terahash mining rigs on the market over time. And so we think we're going to get there, pretty quickly. What we have now is great, but it's the first step in a series of steps, and you'll see that between now and maybe every other quarter or so, going through 25 and even into 26. So I think we think that there's a lot of improvement to be had over time. We're just beginning that process.
I mean, you say a lot of improvement there, Harris, but I mean, the efficiency of this model is actually, or at least seems to be on a par, if not slightly more impressive than the Micro BT M60S series, which is about, I think, 18.5 joules per terahash from efficiency. So you're going into the market at a very, very high level with only really the S21 sort of like fractionally, more efficient. So we look forward to seeing those next machines produced. When you talk about production, I mean, are these machines going to be produced in-house, or do you have a company producing them? And will you have? I mean, you just mentioned there, order for like 1 million, and you only announced the actual update, in the last few weeks. Are you going to be able to meet that demand? Because we've had issues in the past with like chips being, when there's a high demand for chips, and we had this issue a couple of years ago, and it sent the price of mining rigs spiking. What's your view on that at the moment?
Well, yes, I think it's going to be, we haven't said anything yet about our actual volumes or production deliveries. We're still working on that. Obviously, a lot depends on how much allocation we can get from TSMC. We design everything in-house, the chips, the systems, the software. Of course, the manufacturing is outsourced. The chips are made by TSMC, and then our manufacturing is to standard OSATs and contract manufacturers because that's obviously the best way to do it. And so, the volumes, we haven't actually given any real public statement about that yet.
But I'm assuming, Harris, you'll have certainly the volumes to meet your in-house growth plans, which you articulated over the last few days. I'm assuming that you'll get to those at least.
Yes. So, I mean, our in-house growth will be from our own products or almost entirely from our own products.
Yeah, and we'll come on to those targets in a second. But just going back to the machine itself, I mean, I don't expect you to give me the price, but we're seeing at the moment, or we've seen the first 3 months of this year, where miners have been paying $14 to $16 a terahash for the S21 miner. From your own aspect, how competitively priced is the Sealminer A1 to produce? And I know that about 80% of the costs are around the chip cost. So are you seeing that as a really good option for the company?
Yeah, no, I think we have a competitively priced machine. And, when we use it internally, of course, we're using it at more or less at cost, or at least internal transfer pricing. And, our costs should get better over time as well with volume. A lot of the costs are, as you said, chip pricing, and chip pricing is largely based on volume. And as our volume increases, our costs should get better as well.
Yeah, and one more thing to point out about that is, as Anthony, you hit on it, and we discussed this before, is that the majority of the price to produce a miner is really that chip, okay? And that chip is based on, that's priced at a fixed contractual price with TSMC. That price isn't fluctuating with the price of Bitcoin. So, one more thing that this allows us to do, again, just smoothing out some of the cyclicality in this industry. There's going to be times like right now, for example, where margins on ASIC miners might not be as high as they were during previous cycles. During those times, we'll be able to put those miners into our own facilities and run them ourselves, profitably there. If the market sort of returns to somewhere anywhere near where it got to during the last bull cycle, when demand is higher and those spreads blow out more, it's going to be much more profitable for us to sell them to third parties. So again, it just gives us more optionality, more flexibility. But I think the point I want to make is that there will always be a home for those miners. In other words, we can keep producing miners, keep our chip allocation with TSMC high, and keep producing them. And whether we can sell them or use them in our own house, it's going to be accretive to us.
Yeah, very, very exciting stuff, and love to hear, Harris, that you're going over that or going after that top spot. Anthony and I were dissecting this news. We didn't know if the goal was just to build your own fleet in-house or to market these or sell them, but it sounds like you're going for that top spot, which is great. And yeah, with efficiency of 18.1 joules per terahash as your first iteration, I think you're off to a pretty good start there, guys. So my question for you is now about these growth targets. So you've come out with some info this week about your proprietary hash rate, your self-mining growth. My question for you, and Harris, you kind of alluded to this. You said every other quarter or so you may introduce a newer model and start to upgrade some fleet. But what are your expansion plans through 24 and 25 as it stands now with the new Sealminer production and facilities?
So we have a lot of facilities already. And, we have expansion in Norway, we have expansion in Ohio, we have expansion in Bhutan. And so just those facilities, the announced expansions are close to a little over a gigawatt. And we actually can expand that even further without getting any new contracts for land or power. We can probably go up to, 1.5 or even closer to 2 gigawatts of additional power. So we have a lot of existing contracts that we can leverage for growth. So we don't really need to add any new data center sites. That's not to say that we might not for other strategic reasons, but there's plenty of growth capacity within our own existing contracted sites and power. And so the limit really on growing that is getting access to more low-cost capital. And that's really where a lot of the companies, at least Jeff and I, are focused right now, is to make sure we have the capital at low cost to really fund those expansions the way we need to.
Just to follow up there, in terms of capital, Harris, what are you guys looking at? ATMs have been used a lot. Obviously, interest rates are coming down. Is there a preferred method, or is that still up for debate?
So we need a lot of capital, so we're looking at multiple ways of getting it. ATM for sure. We just announced that, and we just a few days ago, and we will be going for ATMs, probably within the next week or two. And so that's one method, and we will certainly use that. And as long as we'll be a little sparing compared to maybe some other companies on the ATM, because right now we feel our shares are undervalued. We will also do partnerships, and I think that those are going to be important because that gives us access to low-cost capital, but it also gives us sometimes expertise. For example, if the partnerships are in AI or in regions of the world that where others have better expertise. So it's through, those are the two primary methods. We're also looking at other things, but primarily ATM and partnerships.
Yeah, there's not many levers available to miners now. I mean, you've already articulated you sell your Bitcoin pretty much on a daily basis, along with a number of other miners. It's not unique in this space anymore now. But the debt, going after debt seems to be the challenge for miners, and we've seen how some of those miners made that mistake in 2022 and have got their debt, down now to more manageable levels. Bitfarms had theirs reduced, from 106 million down to zero. The ATM is probably at the moment one of the sort of like the main factors for mining companies get that advance and grow quickly. I'm glad you articulated that you're going to use it sparingly. But from that 750 million ATM at the moment, over what time period is that available for? And in terms of your expansion plans for 24, 25, how much does that actually get you towards them targets?
So we filed a shelf for 750 million, and the first ATM in that shelf is for 250 million. We expect to utilize that 250 million in a few months, or a few months, several months. It'll depend exactly on how the market is, what our share price is during that time as well. So, and the 750 million is probably, within, let's say, a year or so. These are very rough numbers. We're not, it depends a lot on how the market is, but that's the rough timing. Raising 750 million through the ATM over a year time frame will take us a long way towards where we need to be. But we really like the idea of partnerships as well, because they give more certainty and they bring capital up front, and in many cases they bring expertise that can accelerate the projects. So we have a diverse way of actually growth, and I think it's going to depend a lot on which projects they are as well. For example, an AI project is different than a Bitcoin project.
Sure. Can you just give us a quick example of what, just so the listeners can understand what a partnership means from your context?
Well, it really depends. Is it a partnership in AI? Is it a partnership in Bitcoin? So it can be as simple as a partnership where there's a capital provided by a partner and they take an equity stake in that project. Or it can be something much more complicated or more integrated, where they are maybe AI experts or something like that, and working with us on AI expansion. So in that case, it's more of an operational role. So it could be anything from just providing capital and taking equity share in a project to being an active participant in the project.
Makes sense. And that's where that flexibility you guys mentioned comes in. Now, I'll go off record for a second here. Quick follow-up on the ATM, and it doesn't have to be specific, but just curious, how do you companies think about the ATMs? Is it based on specific price targets of your own shares where you sell, or time, or is it daily, or how does that kind of work internally?
Yeah,
I mean, we obviously look at it daily, but we try to give, sort of broader leeway to the investment bank. So we try to give them a target for the amount of money they need to raise and roughly at what price they need to raise it at, and the fact that they shouldn't have any downward pressure on the stock. And so with those restrictions, which, we can modify those on a daily basis if we want, but typically we would modify them on a weekly or monthly basis. And so we want to make sure that we raise a minimum amount of money per month, but we also can raise a lot more money if the opportunity presents itself. If all of a sudden, our stock goes on a tear and there's a lot of volume, there's a lot of demand, and the price is going up, we want to be able to take advantage of that to get more out of the ATM at that point than we would otherwise. So it really has to be based on moment by moment decisions from the trading desk, but from the point of view of the company, we try to give the trading desk, some weekly or monthly guidance, but not too much more than that.
Gotcha. Okay. Yeah. And the reason I asked, Jeff, you mentioned at the front of the interview there, how do we value your company? You said higher than right now. So it's a very delicate balance of issuing shares without that selling pressure. And just a quick reminder, you guys, ATMs are based on the dollar value, not the number of shares. So the higher the share price, fewer shares, less dilution is obviously the goal there. Now, next question, and I'll open it up to either one of you. We just had Paul Prager on, CEO of TeraWolf. He came out very clearly stating that they had a $25,000 all-in cost per coin pre-halving, $37,000 post-halving. I'm curious to hear from you guys. He challenged us to ask each of the executive teams, where do you rank or stack up in comparison cost per coin all-in pre and post-halving?
Yeah, and I'll take that, I guess. So I can tell you what our Q4 numbers were. So if you look at it on a cash basis, excluding stock comp and depreciation, and I guess everybody does it, a bit differently, but our number was just over 21,000 per coin pre-halving. So post-halving, obviously, there's a few more variables to factor in there. One would be obviously our expansion. So with that expansion, we just announced that we're going to expand our proprietary hash rate from about 8.4 up to right around 12 using our new Sealminers. So obviously our efficiency is going to increase there from, call it 31.2 right now, I think, to somewhere in the mid to high 20s, depending on how quickly we ramp that. So you guys know how it works. That the variable costs are your energy, and the rest of your G&A is going to basically stay flat. We don't expect a significant amount of increase there. So the economics get better with scale. So I don't have an exact number for you for post halving, but something less than double than what our current costs are. I'd also say that energy costs are going to play a big role in this as well. And energy management and energy strategy is going to be a much bigger part, I think, of everybody's, but particularly our strategy moving forward here. We've recently brought in some energy strategists to start really looking at our costs and in both Texas, which obviously we know that's can be a lucrative market to operate in, but also some of our other locations as well. So we think there's a lot of room for improvement. Obviously going into a halving, I think Harris said this in a panel a couple of weeks ago that if you haven't started planning yet, there's not much you can do now. But efficiency is one thing that can be handled. Energy price is typically something that's going to have a longer lead time, but we believe we've got opportunities within our existing energy stack to reduce costs there as well. So we think there's quite a bit of room for improvement, and we think our already what we would call pretty lean economics can improve even more. And that also that includes our R&D expense in there as well, which, to my knowledge, no other miner has any material R&D expenses, so that all-in cost includes that R&D as well.
I mean, some companies haven't even got 50 employees, and you've got 50 employees working around R&D. But you mentioned there about Texas, and we had Jason Les on the show a couple of weeks ago articulating how the energy strategy that they've used at their Rockdale facility, which is literally adjoined to your facility, same location, and they've made some real benefit from curtailment, and we're sort of getting down to a cost of about 2.2 cents a kilowatt hour when they took into account some of the savings they made. Are you seeing some of that same sort of benefits from your facility? Are you adopting them same strategies as Riot down there?
We have, yes.
Yeah, I should say that Riot was smart or lucky or a little bit of both in that they got some great hedges early on. And those hedges are probably going to be hard for anyone to duplicate. However, we are putting together what we feel is a pretty sophisticated strategy for managing energy costs in Texas. And we will be using, some of the same things that Riot is using, but also some additional things that we are developing along with, some energy trading experts that we've hired. And so we expect that there's a lot of opportunity in Texas, by the way, in Ohio as well, to manage energy prices in a way that can be very useful for the company.
Yeah. No, I would bring up Ohio in that conversation as well. We think PJM has kind of been an overlooked, energy market for Bitcoin mining. But PJM it's a deregulated market, very similar to ERCOT. just probably less volatile than ERCOT, so you're not going to see some of those huge spikes. But they do have the demand response and the ancillary service programs there that some people say could be even more lucrative there. So we're really excited about transitioning into Ohio because we think that's going to be a great market for us. And so we've got 221 megawatts under construction there right now. Possibility maybe to expand that. So yeah, like I said, we think that gives us some more geographical diversification within the U.S., but in a very compelling power market.
Yeah, it's good. It's a good point, Jeff. I mean, we're getting close towards the end of the interview now, but one of the key business areas that a lot of the miners looking into now, not necessarily the biggest miners, but most of the other miners looking to the high performance computing side. You've recently announced, you're going to have a service for the Asian region. How sort of a bigger part of the business will this develop into for Bitdeer itself?
So over time, we expect it to be a very significant part of the business, but that is really over time. This is a long-term strategy for us. We're going in measured steps. We are hoping to do much more than just be someone that resells time on GPUs. We want to be involved in model development, software application development, things like that. So that takes time. It takes a lot more effort. We are working with NVIDIA on that. We're trying to be a turnkey service for some of the customers that we work with, where we provide a lot more than just the GPUs. So it's a small site now in Singapore, but it's a showcase site in the sense that it is top line everything. We have the DGX 100s from NVIDIA, not from clone manufacturers. We have their full software stack, all their models, and we are working with smaller and mid-sized companies that are stepping into AI and need more support than like a hyperscaler or someone who just wants to rent GPU time from you. So that's our approach in Asia. As we scale it up, as our expertise improves, you're likely to see those operations outside of Singapore. Singapore is not. It's a great place to get high quality talent, but it's not the best place to have a large data center. I don't think any city is, and so we will be expanding. Mostly the large expansions we have will be outside of Singapore.
Yeah, I mean, it's we've had so many of the CEOs come on recently and articulate what they're doing in this sort of space, and we had Sam Tabar from Bit Digital. Now they've leased their facility, they've leased their machines, but one thing he came out with in the recent podcast was that the margins that they're achieving with their clients at the moment are significantly higher than the margins they're achieved through Bitcoin mining at the price of Bitcoin at the moment now, and even at the price if Bitcoin went to 100,000. So that was very bullish comments from Sam. Are you sort of like in the numbers? Are you sort of seeing that? We've also heard from Iron that they're similarly having the opportunity to get some really good margins. You see that as in sort of like ballpark figures as well?
So what margins we're seeing now and margins that we hope to see are different. This is initially a fairly small site. It's one superpod, and as I said, it's in a showcase high-end area. But we do expect good margins. We haven't released what those expectations are, what the numbers are. But we do think it's going to be even a great business for us for expansion, and it does take a lot more capital. It takes a lot more capital to put up a 50 or 100 megawatt data center for AI than it does for Bitcoin mining. And so until you can start playing in the large scale game, I think that it won't have a material effect on us. But once we do, it will be a very material effect. So I think there's some learning between now and then.
Yeah, we've seen a number of comments from those companies that won't be stepping into this space, but it just seems the group that are growing their HPC businesses seems to be growing, company by company. Every day there seems to be another announcement. So, 6 months ago, I was sort of like very critical of mining companies moving to this space, but you sort of like it's been more like a domino effect. It's like as soon as one's announced, it's like one-upmanship. Everyone's trying to announce theirs now, and granted, there's not many have come out and said they've got a partner now or a client, but a couple of them have, and we'll probably see, in their earnings updates when they come out, the level of margins. No one's actually physically said what the margins are going to be, but they've said that they're pretty good. And we had this like when the mining companies were mining Ethereum, when the margins were sort of like 95% gross margins, and we're sort of getting a sense that we're going to see some sort of significant levels of margins in this there. But granted, I understand it's from your point of view, it's a growing business at the moment, but you can see the potential within that.
Yeah, and I would just point out that the margins are higher on a cash basis, but the capex, is exponentially higher. Just pretty good in perspective. 1 megawatt of Bitcoin mining might run you $1.5 million, something like that. 1 megawatt of HPC AI is going to run you 25 million. So it's a big boy capital game for sure, and it's the depreciation is real for sure.
Yeah, Sam mentioned I think it was like $60 million to grow their current annualized revenue from 50 million to 100 million.
Yeah.
And but yes, you're going to get 50 million of revenues coming in. The energy cost is nowhere near the level of energy costs that for Bitcoin mining. So but he's had to fork out potentially like 60 million for then a return over 3 years of about 150 million, less all the operating and all the other direct costs that you'd normally apply to that service. But he feels that there's a good margin there for the company to make. And I think for some, I won't put you in the bracket as some of the smaller miners, because you're actually, when you add everything together, you're probably in that sort of like that top tier when you look at it from a business point of view. But some of the smaller miners who are probably having a more challenging way to grow are probably using this as an opportunity to get some revenues that aren't correlated at all to the price of Bitcoin, and see them through this halving till the price of Bitcoin sorts itself out, because nobody knows what's going to happen in 3 or 4 weeks' time when that halving happens, and I don't know, and neither does anyone else on this call know. So it's it's that challenge that we're all facing.
Really interesting, and we've heard that from a lot of people. A lot more capital intensive up front. You got to spend money to make money, and those tier 3 data centers don't come cheap. So makes sense. Now, guys, I know we've covered a lot, everything from the Sealminer to some earnings to growth. I'll flip it back to you in case there's anything we missed here. Any final thoughts? Anthony, maybe we'll start with you if you have any lingering questions, and then we'll flip it back to the Bitdeer team there.
No, I've been fortunate to. I've covered the company in an article recently, so I had some time with Jeff and with Harris to go through some of those issues, and I hopefully was able to articulate parts of that business that people probably don't even realize they do, because we focus on self-mining, but to be honest with you, some of these miners do far more than that. And I did some numbers, and the self-mining element was less than 50% of the business. So in this instance, it really needs emphasizing, because people just look and say, oh, here's a company with 7 exahash or 8.4 exahash proprietary hash rate, compare it to another company with with the same amount of hash rate, and say, why is that share price, why is it, doing less, not doing as well? But there's a business behind it, and I think we just need to try and make sure we reiterate that, on not just from Bitdeer's perspective, but on other miners as well. I think we've done the same with a few of the other miners as well, to highlight what they do as well as self-mining. But yeah, it's good to hear. The thing that impressed me is the Sealminer A1. If that's your first attempt of bringing out a miner that can compete with the micro BT best miners on the market, that gives a lot of confidence then for what's the second generation going to look like. We'll all look forward to hearing that.
People too. Yeah, no, I think you hit it right there. And Anthony, I think you did a great job in the article. We appreciate it. And I would just encourage investors to take a look. We are a bit more of a complicated story than just your pure play self-miner, but we think there's a lot of value to that. And I think if you take a closer look and see the diversification and see the value that's added over the last couple of years, and seeing how we've been able to leverage that into smoothing some of that cycle out, I think people will be pleasantly surprised, and said hopefully we get some more eyes on it.
I think our strategy plays to our core company DNA, to be in R&D and to be long-term strategically in Bitcoin mining. Whereas if you're simply just doing self-mining by buying commodity third-party products and commodity energy, then that's long term. That strategy is more difficult and actually doesn't suit our company. Our company is really a technology company. It's a long-time Bitcoin company, and we have some of the old guard in terms of Bitcoin mining within running our company, and we intend to be in Bitcoin mining for the foreseeable future.
Well, there we have it, guys. I mentioned at the top of the intro, Bitdeer is firing on all cylinders. It feels like this is the year to really put the foot on the gas. You guys, you've got so much going for you. We appreciate you explaining the business, walking us through some of the numbers, and obviously answering the questions. You're welcome back anytime. Guys, if you're still watching the video, feel free to hit the like button. Feel free to subscribe. We're almost at 43,000 subscribers. And Jeff, I'll give you the last word there.
Yeah, no, thanks. I just want to say thanks for having us on. It's been kind of a long time coming. We're excited to be here, and yeah, I think you hit it on the head there. This looks like the year to put all the pieces together.
Amazing. Well, you're welcome back anytime. Harris, great to meet you. Jeff, likewise, and we'll see you soon.